When adding your partner helps. Now, there are going to be some very obvious reasons why you would probably want to pursue a joint application as opposed to a solo application. So, one of the things that you want to look at is their credit. Do they have good credit? But if they have good credit and a lot of outgoings, then it may not be so good. But if they have good credit, low outgoings, that's going to work well. If they have stable employment. So, as I said before, if they've just started a new job or if they've just started self employment, then that might not be good. But if they have a stable job, have been at that same job for a while, good salary, that's going to be great. Clean financial history and a similar age. So, everything else could fit. So they could have a great job, great income, no outgoings, but maybe they're a little bit older than you are. And remember, the mortgage length, so the overall term of the mortgage, is going to be determined by the oldest person on the application. So keeping that in mind, if you do add someone to the mortgage application and they're considerably older than you, then it may impact things unless you do a joint borrower sole proprietor mortgage and do what they call a dual term, which I have lots of videos on that. So make sure you look through my videos and look at joint borrower sole proprietor. There are other times when it's definitely not going to be a good idea to put somebody else on your mortgage. So it's essentially the opposite of what I said about why you should put someone on the mortgage. So one of the reasons why you're not going to want to put someone on your mortgage is if they have severe credit issues. As I said, if they're considerably older than you, so if there's a huge age gap between the two people, the application is usually going to be reviewed based on the oldest person. Another thing is they may have good credit, they may be a similar age, however, they may have a lot of financial commitments. So even if you're making £180,000 a year, if you're spending £170,000 a year, then that's not going to help the application. That's actually going to hurt the application. So you definitely want to avoid that. Other things to consider is recent self-employment. I talk about this a lot and people don't always take this into account. So the difference between being full-time employed and part-time employed and being self-employed is if you're full-time employed with a contract, then the lender views your contract, what's stated on your contract as far as your income, they view that as your income. So there are lenders that will even lend, even if you have a job offer with a nationally recognized company. I need to stress that, a nationally recognized company. So as long as you're starting within the next 3 months, some lenders will view that as your income. If you're getting a promotion at the same job, so you're currently, a supervisor and you get promoted to general manager or whatever, and you're going to get a pay increase, the lenders will take your new income. However, if you've just become self-employed, you're going to have to wait. And the reason why you're going to have to wait is because your self-employment income is based on at least 1 year's SA 302 and tax overview. So a good example that I usually use with people is, let's just say you go self-employed and you have a huge contract with Google. You haven't been paid that money yet. You haven't made that money yet. So the lender's not going to say, yeah, well, Google is going to pay this amount over the course of a year. What the lender wants to see is that you filed your taxes, you've shown them how much you have actually made. So that means if someone has just recently gone self-employed, you're probably not going to want to add them to the application because it will hurt the application because we won't have any way of assessing an income at that point. Bigger income does not always mean a bigger mortgage. So a bigger income does not always mean a bigger mortgage. Many people figure because they earn more, then they're going to be able to afford more. But as I've said, and I say regularly, just because you're making a lot of money, it doesn't mean that that will go towards your affordability when the lender is assessing if you can afford a mortgage or not. They're going to look at your outgoings as well. They're also going to look at the Office of National Statistics as far as how much it should cost to run your household. So it's not just a matter of you saying, well, we don't pay childcare, we don't pay this, and we spend £75 a week on groceries. They're going to look at what the average household made up of two adults and three kids, or two adults and two kids. They're going to look at the averages and they're going to apply those averages to the application. So, this is why speaking to a broker, doing an actual assessment where that broker is plugging in real numbers and doing some of the due diligence prior to doing the application, it's going to be really useful. It's going to save you time and it's going to save you a lot of stress because you're going to be able to know what those things are in advance. And that way you don't have needless credit checks. They're also going to look at future affordability. So if you are approaching retirement, so if you're in a certain amount of years until you retire, so you're approaching retirement quite soon, what the lender's going to look at is not your employment income. They're going to be looking at your retirement income. So do you have a state pension, a private pension? Do you have any investments that are going to be paying out? I have a really good video for people that are over 50 that are looking at either paying off what was an interest only mortgage or maybe doing later life lending. It's a really popular thing. And later life doesn't mean what it used to mean, because a lot of people are getting on the property ladder a lot later in life. And some people have been divorced and therefore they may be getting on the property ladder for the second time around. So if you are considering getting a mortgage, speak to a mortgage broker before you decide if you should or if you should not do a joint mortgage application. The questions you should ask first are, do both of us need to be on the mortgage? So if one person is a high earner and you'll be able to get the house that you want and you'll meet the affordability criteria, then it's fine. Maybe you don't need to have both people on the application. You also want to ask, is the credit significantly stronger? Is that person's credit score stronger? Will adding the second person to the application increase the borrowing? Who should own the property and which lenders will suit those circumstances? Now, these are all things that you may not have considered, and you may not even understand why these things are important, which is why speaking to a broker is going to clarify those things before you move forward. There is something called joint borrower, sole proprietor, which in many cases, when someone comes to me and says, you know what, I don't want to put my spouse on the mortgage, or they say they do, I look at it and say, well, this might be a route for you. So I do have a lot of videos on it, but essentially a joint borrower, sole proprietor mortgage is one where, let's just say you have me and my wife. We do a mortgage together. However, instead of both of us being on the title, only one of us may be on the title, but they would still include the other person's income. Now, this isn't always going to work if you're a married couple. But the reason why I do bring that up is because there's a lot more people who are looking at getting a mortgage together. Maybe they're close friends, maybe they're siblings, maybe they're cousins, or maybe they're just a couple. So they just want to get the mortgage with their partner. And for whatever reason, they don't want the other person to be on the title, or the other person, for whatever reasons, doesn't want to be on the title. These are things that you want to discuss with a mortgage broker. And one of the key things is making sure that you're always open and honest as far as your reasoning behind it. Quite frequently, when people come to me, they'll say, I don't want to put my partner on the mortgage. And I'll say, why? Oh, no reason. And quite often it's just because they're trying to protect the other person's first-time buyer stamp duty discount.